Hey guys, Matty Miller here, Pursuit Real Estate. Today we're going to talk about a hot button issue called the 50-year mortgage. And is this a good thing or is this a game changer for our economy and our affordability crisis? We'll talk about it here in a little more detail. All right, guys. So if you've been watching the news at all, which I tried sometimes my best not to, but I do hear some things that make my ears perk up every now and then. And apparently the 50-year mortgage option has been presented for home buyers in America. And why would somebody want to do that? And why is the 30-year not okay or not good enough? Well, home prices have surged so much because of inflationary issues. That's a whole other conversation. That the home affordability crisis is what people are talking about. So an option that was presented was a 50-year mortgage. So financing a home for 50 years. And we'll talk about the numbers of that real quickly, but I want to point something out. There's an article that was released, and there's a whole bunch of articles, but I just happened to pull one from NPR, which typically takes a fairly middle of the road stance on things. But there was a quote in there from the Federal Housing Finance Agency Director, Bill Pulte. And if you can connect the dots real quick and hear that last name Pulte, and you know that Pulte Homes is one of the largest home builders in America. Yes, Bill Pulte is the grandson of William J. Pulte, who was the founder of the Pulte Group, which is one of the largest home builders in America. So he said, quote, "This plan would be a complete game changer." Well, why would he say that? Well, he would say that because they build primarily first-time home buyer builds, and they would be able to sell more houses. So there 100% is a personal gain in that regard. When you see things, this is insane to me personally that we're having this conversation, because a 50-year mortgage, and I just want to break down numbers here, is not really going to be a game changer. First off, let's talk this. On a $400,000 loan, if you put $50,000 down on a $350,000 financed note, your savings is about $225. It's not a lot over the course of that payment. So you'd have a slightly lower payment. However, if you were to stay in that home for 50 years, that $400,000 home at 6.25% interest rates would cost you $1.139, be a $1.1 million home. Okay. That's how much interest you would pay on a 50-year $350,000 note. Let's go back to a 30-year mortgage, which is our current plan. If you stayed in that for a 30-year mortgage, $350,000 note, you're paying $773,000. So not real good at math there, but those numbers don't exactly coincide with a game changer. Okay. So $200 less a month to pay almost $450,000 worth of interest more. Who's winning here? The bank. The bank is winning. The lenders are winning. For this to be thought of as a conversation is in my mind kind of insane, to think that it's actually going to fix anything. Not only that, let's talk about a situation where Matty buys a home and he takes a 50-year mortgage out, and largely in the first 12 years of this mortgage, I guarantee you from an amortization schedule, is probably pretty much going to be interest only. So let's say you stayed in a home for 7.5 years, which statistically speaking in America, that's the average time that someone stays in a home. 7.5 years, you may have gained almost no equity in this. You're paying all interest, none. So when you go to show your home in 10 years or 9 years or whatever, you're going to look at that balance and you're going to go, holy crap, I still owe this much. And the housing values haven't really changed that much, because in theory, they really need to go down to get this reset. But that's a whole other conversation as well. It wouldn't really solve anything, in my opinion. That's my personal opinion. After looking this, talking to other professionals in the business, I don't think it's a viable option. I think it's really kicking the can down the road and taking advantage of people who otherwise can't afford a home to ultimately pay a whole bunch of interest they otherwise wouldn't. And the bank is winning, and the lenders are winning, and the consumers being left holding the bag. Again, not a long video. Don't think it's a great idea. I'd love to hear y'all's comments on this, and see if anybody has maybe anything otherwise. If somebody can give me a positive, hey, yes, I do think this would be a great idea, here's why, I'd love to hear your comments. Again, Matty Miller with Pursuit Real Estate. Love to hear what you guys think. Take care.